This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro, and I'm going to give you a stock market update today, and I'm going to go through the market conditions. Haven't done that in a little bit. Want to spend a few minutes going through a few things that I think are pretty important just to recognize where we're situated and go through the both all the trends on all the different time frames as well as the momentum. So let's go ahead and get going on this. So as we start out, we'll just start with the sentiment, the bulls versus the bears. And this is the Investors Intelligence Sentiment Survey from the newsletter writers, which essentially has gone from a negative 15 to a plus 10. So we've had this move, big drop. People got very bearish, and negative 15, that means there were 15% more bears than bulls at the low or in the area of the low. And so that's a pretty big number. In 2008, after a big, long decline, we got to negative 25%. But for many, many years, this is about as low as we've seen. I think we got down to about 12 or 13% in 2020. So that, obviously, if we're looking at it as a sentiment index, meaning that we're looking to be contrarian. So when everyone's bearish, we want to get more bullish. So this was a pretty good signal at the bottom. Now, what I mentioned last time about the volatility, so I've got this red line. This is a weekly chart with the red line being the average true range of the weekly bars of the S&P. And the last time I mentioned this, I said that it had made a pretty big, if you notice the times where it makes these big moves, and this was actually a double move there and then a big move here, just tend to see this thing start to top out, pause, at least go through some kind of a breather, and it looks like that this is tipped over. If we look at this on a daily chart, it's a little bit more blatant. You can see that we're below a declining moving average, and it's almost making a lower low here from this last bottom. So, this trend is turning up on a daily chart, and this is turning down, meaning that the volatility has shrunk, and that's usually a better environment, generally speaking, for the market. So from a weekly standpoint, we're still in a trend that's a little high volatility, but it has looked like it's tipped over after a long run. Now, if we look at the overbought oversold oscillator using a 5 RSI, this actually gave a pretty good signal off the bottom. We made a lower low in price and a nice higher bottom in the RSI at the low. And now we're working our way up towards this overbought line around 70, but we haven't quite reached it yet. So I just thought it was worth kind of bringing you up to speed on some of these things. Just recognizing that the sentiment has flipped, but just to make one comment about the sentiment, just because it's gone to plus 10 isn't an automatic negative. Once we get some kind of a bottom in place like that, a lot of times it takes this number getting up to about 30% to have a real negative effect on the market again. Now, I'm not claiming that for sure that we've made a bottom in the market. I'm going to go into that in a little bit more depth here as we go into the individual time frames. However, I think it's very possible that we've seen the bottom in the sentiment number at this point. So let's go ahead and switch over and look at this chart. We're going to start with the monthly, and we still have this sort of indecision that's taking place. Now, one of the things I want to bring up is, and what I've been discussing, was the fact that this 18-month was starting to flatten out. But if you notice, by the end of the month, we came back so far from here that that flattening out kind of changed, and this is still rising. This line is still rising right now. So we've lost a little bit of slope, but not to the degree that we had when this was down here. Because remember, it's incorporating in the last price. It's being incorporated. It's dropping off a month and adding on a new month. And so whatever the current price is being incorporated into this moving average line. Now, we are fighting the trend of the MACD from an overbought condition. It still hasn't run its course, I don't think. So I would think we're going to hit some resistance up here either way, whether this line is rising or not, just because of what's going on a MACD basis. With that said, if this is still rising, it could end up being a more muted decline phase, and it could end up being more of a sideways pattern rather than just failing. Now, what we're still watching for is this going to turn over, hit this, and then fail? Or do we push up through this, maybe get through it a little bit, and then come back down through it, and this rolls over? That's also negative. So we're still on the lookout for that just because of what's going on here. We're not out of the woods by any stretch of the imagination, but in the near term, we have to respect the tape. And the tape, which was terrible, and I was saying the tape was terrible for a while. Now the tape has been much, much better. We had a terrible down bar followed by a really good up bar on the monthly chart. All right, let's go to the weekly and just take a quick look at this. As I mentioned last week, the MACD flipping over above its signal line, stretched away from the zero line, is a positive. It's not usually a timing tool for me. I don't necessarily consider that an operative buy signal, but I think the bias is sort of switching in the near term because the likelihood is that this wants to work its way up a little bit. Now, it might pull back first and form a pinch. And, that might be what takes place here. This cups around, something like that. But we could also work our way up towards a bigger resistance and that 18-month line. It's certainly a possibility. The key thing I wanted to discuss today was on the daily chart and the hourly chart. So we've kind of turned things here. We've made the move up, pull back, move up, pull back. Now we've made a higher high, pulled back, made another higher high. We've made higher lows. We clearly have a trend that's up because I can draw a trend line to the upside now. You see how I'm connecting those two lows as a trend line. We're getting up into this resistance zone, 420. It's 4,200 in the S&P, something like that. But there's a couple of things I think that are key here. Number one, the ADX was strong enough based on the buyers to get above 25 on the daily chart. Now let's go back and see when was the last time that happened. That was way back here, way back in end of October, early November of last year, where price was working its way back up. And ADX based on the green, based on the buyers, got the ADX to cross above 25. We have not had this happen during this whole phase, this entire year. This is the first time this has happened. Now, again, it doesn't automatically mean it's a buy signal. In fact, we had a little pinch here. It's very possible that we could see another pinch. And a lot of times what you get are two bull flags, right? Bull flag, and then we get a more complex correction. So that's the way this could play out. If we get a little pullback here in the short term and get a little closer to the 18, maybe you get in one more little buy to the upside, and then we get some form of a more complex correction after that. So this is what's kind of interesting. We had this pullback I mentioned last time. That was a pinch. And then we got another here. This was a pinch crossing the zero line. Okay. Now I want to look at the hourly at the same time. And in fact, I'm going to pull this down so we can see it a little bit better for a second. So the last time we ran up, moved up, we had a little divergence here, and we had ADX not confirming a move up to 25. And then we got our ABC down and a zero line reversal. Okay, the zero line reversal coincides with the pinch play. I want you guys to learn this. This is the one thing, if you're going to learn one thing today, this is what we want to learn. Higher time frame pinch, lower time frame zero line reversal. Look for this pattern on orderly 2 to 3 bar pullbacks. It happens a lot. It's a great little signal. One little helpful tool is number one, on the high side, we want either strong ADX or green crossing and holding 25 on the upper time frame, and on the lower time frame, we want low ADX to coincide with the zero line reversal. If you have that, you can really take a trend line break like that as a operative buy signal, zero line reversal, low ADX, and on the high time frame, you have a pinch play here, Nice little orderly pullback to the breakout and green DI confirming. Now, most of the time when you're early in the trend, the ADX is not going to be above 25 yet, so you have to use DI in that circumstance. So we could get another one of those. It's possible, or maybe this thing is just going to kind of push into higher into resistance and then have some trouble. But just to point out, if we do get one more pullback, it would make sense. You get a lot of times you get two little pinch plays after the breakout point. I know we've already had two pinches, but I'm talking about after the breakout. You normally you'll get two kind of little bull flags and then a complex pattern. So kind of keep that in mind here. Now look at what's happening right now. We're on the hourly chart. We made a new high, and MACD is clearly not making a confirmation, and neither is ADX. So both of these are diverging right now. But what's missing is, so we could come in tomorrow, and again, I'm doing this Thursday night for Friday morning. So we could come in Friday, and since I don't have the luxury of the futures contract and knowing how this is going to trade, I mean, for all I know, they're going to be up big. It could be down, but the likelihood is not going to be down big. And what could happen is, this could just keep pushing higher. And if that's the case, then there's no sell signal, even though this is diverging. Remember, these are giving you a preliminary information, right? They're giving you some kind of information to watch, but your trigger is off the price chart. You use the price chart with the moving averages as your trigger, and you use these to sort of anticipate. All right, and so we're looking for some kind of strength to the downside and maybe even a lower peak or something like that to kind of confirm what's going on here on an ADX basis. But even though this is diverging and this is likely to create maybe some kind of little reversal like this, we know we've got enough strength here to continue to trend in the near term. So don't look for anything dramatic to the downside right this second, even though we're hitting resistance. Remember, I kind of changed. I used to look at this and say, wow, we're hitting resistance. This is an automatic sell. And what I learned is if the momentum is good enough that I don't have to sell. I can trim. If you bought down here and you want to do a little selling, I don't have a problem with that. But don't sell the whole thing. Look to scale out because the momentum is strong enough. It could continue to trend upward at this point. All right, so that's the update for the week. Go ahead and post any questions or comments, and we'll see you next time.